Right now is the easiest time in history to start investing in stocks. It has never been this simple, this accessible, and this powerful. But here's the catch. This window won't stay open forever. Think about it. With just your phone, you can open a brokerage account in minutes. You can buy a piece of Apple or Tesla with as little as $5. You can automate the whole thing and never touch it again. Investing is literally on easy mode, but most people will still miss it. In this video, I'm breaking down the 11 reasons why stock investing is on easy mode, and the simple formula that makes sure you actually win. Reason 1. Investing tools have never been simpler. 20 years ago, if you wanted to buy a stock, you needed to call a broker, pay fat commissions, and fill out piles of paperwork. Today, it's 2 clicks on your phone. Zero commission apps like Robinhood and whiteboard. There's fractional shares, which means you don't need thousands to buy Amazon, you just need $5. And global access, from almost anywhere in the world, you can own a piece of the US market. This is the lowest barrier to entry investing has ever had. If you're not in yet, you're literally falling behind while everyone else is playing the game on easy mode. Reason 2, index funds is the cheat code. Here's the crazy part. You don't even need to pick stocks. For most beginners, buying a simple S&P 500 index fund is enough to outperform the majority of professionals. Over the last 15 years, more than 90% of active managers failed to beat the S&P. Low-cost ETFs like Vanguard's VOO or BlackRock's IVV give you instant diversification across the 500 biggest US companies for almost no cost. Instead of gambling on which stock will explode, you can literally outsource your investing to the entire economy. This kind of access wasn't available to normal people a few decades ago. Today, you can buy the whole market in seconds. Reason 3, automation does the work for you. Most people fail at investing not because they're dumb, but because they don't stick with it. That's where automation comes in. Automatic deposits into your brokerage account, dividend reinvestment plans, or better known as DRIPs, that buy more shares without you lifting a finger. Even robo-advisors that build a diversified portfolio for you. It's like putting the game on autopilot, and the earlier you start, the easier it gets. Compounding is the single biggest cheat code in finance. Every year you delay is not just 1 year lost, it's decades of growth you'll never get back. Reason 4, free knowledge means no more excuses. In the 90s, investing knowledge was locked behind brokers and expensive courses. Today, everything is free. YouTube channels, podcasts, newsletters. Literally, what you are watching now is free. Free apps that show you real-time data, communities where you can ask questions and learn without spending a dime. You now have more access to stock investing education than Wall Street professionals had 30 years ago. Ignorance is no longer an excuse. The manual for easy mode is literally in your pocket. Reason 5, global access has exploded. Stock investing used to be something only the elite could do. If you weren't in New York, London, or Tokyo, you were locked out. Not anymore. Retail investors in Southeast Asia can buy Apple or Microsoft shares for as little as $10. Apps make it possible to own US and global stocks from anywhere. This is the most level the playing field has ever been, but the more people catch on, the more competitive it gets. Quick note, if you're serious about starting your investing journey, I've put together a free masterclass where I show my full step-by-step system for building your first stock portfolio, avoiding beginner mistakes and growing it over time. You can watch it anytime using the link in the description. Reason 6, inflation is a silent tax. Keeping money in the bank might feel safe, but it's one of the riskiest decisions you can make. Every year, inflation eats away at your savings. The same $1,000 that buys a basket of groceries today might only cover 3/4 of that basket a few years from now. Your dollars don't just sit still, they quietly lose value. That's why investing in stocks isn't just about chasing growth, it's about protecting your future. Companies in the stock market have the ability to raise prices, grow revenues, and outpace inflation over time. By owning shares of those businesses, you give your money a chance to keep its purchasing power, and ideally, grow beyond it. Reason 7, both bonds and stocks look attractive. For most of the past 20 years, investing came with a trade-off. If you wanted safety, you went into bonds, but the returns were tiny. If you wanted growth, you had to dive into stocks, but you had to stomach all the volatility. Beginners often felt stuck, forced to pick one side and risk missing out on the other. Right now, that's changed. Interest rates are high enough that bonds are finally paying meaningful returns again, while stocks, after recent corrections, are trading at some of the most attractive valuations in years. For the first time in decades, you don't have to choose between stability and growth. You can build a balanced portfolio where both sides are working in your favor. This combination won't last forever. Rates will eventually fall, markets will heat back up, and the sweet spot we're in today will disappear. That's why it represents such a rare window, one of the best setups beginners have had in years to start investing with confidence. Reason 8, side hustles fuel portfolios. One of the biggest changes in the last decade is how easy it's become to earn extra income outside of a 9-to-5 job. Millions of people today have side hustles, freelancing online, running small e-commerce stores, driving for rideshare apps, or even creating content on platforms like YouTube and TikTok. That extra stream of money isn't just for buying gadgets or covering bills, it's the perfect seed money for your investment portfolio. Here's why this matters. Your main salary often goes toward necessities: rent, food, bills, and savings. But side hustle income is flexible. Even if you only make an extra $200 a month and invest it consistently into stocks, over time, compounding can turn that small contribution into tens of thousands of dollars. What feels like small money today could literally fund your retirement tomorrow. And here's the kicker. Most people spend their side hustle cash on short-term rewards: new clothes, takeout, or vacations. There's nothing wrong with enjoying it, but if you're not putting at least some of it into stocks, you're missing the single biggest wealth-building hack of this generation. Reason 9, tax advantages made simple. One of the biggest hidden advantages in investing isn't just what you buy, it's where you buy it. In the past, figuring out retirement accounts, tax shelters, and deductions felt complicated and intimidating. Most beginners ignored it completely, and as a result, they paid far more in taxes than they needed to. Today, that barrier is gone. Brokerages walk you through tax-advantaged accounts step by step, and the apps themselves track your gains, losses, and dividends automatically. If you're in the US, that means accounts like IRAs or 401ks can grow your stock investments completely tax-free until retirement. In other countries, similar systems exist, from ISAs in the UK to EPF in Malaysia. The point is, the tools are no longer reserved for professionals. They're built directly into the platforms beginners are already using. And here's the key. Every year you don't take advantage of these accounts is a year you'll never get back. Once the tax year closes, those allowances vanish forever. That's free money left on the table. And it's one of the simplest ways to boost your returns without changing a single thing about the stocks you buy. Reason 10, communities equals accountability. In the past, investing was a lonely journey. You might have bought a few stocks and read the paper, but you had no idea if you were on the right track. There was no feedback, no guidance, and no one to hold you accountable. Today, that's completely different. Reddit forums, Discord servers, and even YouTube comment sections have turned investing into a shared experience. Beginners share their first wins, veterans offer advice, and people encourage each other to stay consistent through the ups and downs. This sense of community is powerful. Seeing others stick with their plans and grow their portfolios makes it easier to stay disciplined yourself. And when you have questions about index funds, dividends, or strategy, you can get answers instantly. Everyday people are compounding wealth together inside these communities. If you're not a part of it, you're not just behind. You're watching from the outside while everyone else moves forward. Reason 11, barriers are only going back up. Right now, the doors to investing are wide open. Trading fees are at historic lows, brokerage apps are free to use, and almost anyone with a smartphone can own shares of the biggest companies in the world. It feels like investing will always be this cheap and accessible, but history says otherwise. Every few decades, the rules change. Regulations tighten, governments impose new taxes, and brokerages find ways to add back hidden costs. Even competition shifts. The more investors pile in, the harder it becomes to find the same outsized opportunities that exist today. We've seen this pattern before. There was a time when discount brokers offered trades for under $10, and people thought that was the floor. Then fees crept back in, and access became more complicated again. Nothing stays wide open forever. That's why this current moment is so rare. The barriers to entry have never been lower, but they won't stay this way. Easy mode is temporary, and the longer you wait to get started, the harder and more expensive the game becomes. So now you know why investing is on easy mode. The next step is putting it into action. That's exactly what I cover in my free investing masterclass. Inside, I'll walk you through everything, from picking your first stocks to building a portfolio you can actually retire on. It's 100% free, and you can watch it right now using the link below. I'll see you inside.